Welcome everybody to the OfferFit virtual series. Really delighted to have Amy Radin joining us today. Amy is a leader in marketing and innovation for large enterprises, especially in the financial services sector. She's been an advisor to OfferFit and has been an invaluable source of guidance to us. Some of her previous roles include serving as the Chief Innovation Officer of Citi, and in that capacity, leading major change initiatives in one of the world's largest companies, not just in financial services, but in any industry. And yeah. Amy is the author of The Changemakers Playbook, a best-selling book about how to make innovation successful in large companies. So welcome, Amy.
Great to be here. Love working with OfferFit, and looking forward to the conversation.
Well, Amy, I'd love to start, the topic that I'd love to chat about today and get your experiences in is personalization in financial services marketing. So my first question for you is, why are financial services companies interested in personalization in their marketing efforts? And what methods for personalization do you see them currently using, like common software or in-house models that they build and so forth?
Mm-hmm. So I think why are they interested? I could answer that question from two perspectives. One is from, it's a competitive market out there. And with the advent of digital and just this multiplication of channels and the role that technology is playing, simply to grow their businesses and build deep relationships with their customers that deliver the financial results that they want on their income statement and balance sheets, they have to get better and better at understanding, what's the right offer at the right time in the right channel to each customer and also to attract prospects. So simply because of the proliferation of options out there, you can't run the business without personalizing. And I think that's becoming more and more true in many businesses, but definitely in financial services, which for a long time has had a strong virtual component to it. The other way to think about the answer to the question is from the customer's perspective. So people more and more, and I think this is definitely true of the consumer, the retail world where I spent most of my corporate career, but also the corporate world, is when it comes to issues around your financial decisions or your business's financial decisions, it's more and more important to have do business with companies who you trust and whom you see as your trusted advisor. So think about, and many people in the audience might not remember the old days, but I certainly remember from my childhood, the old days of the retail branch, where you could go to the branch and, like my dad, who owned his own business, go to the branch and shake hands with the branch manager, and that was how they did business. So the opportunity around personalization is to use data and technology and all of these new channels to recreate that trusted advisor experience in the world of the 21st century. But the key to doing that is to be really great at personalization.
Yeah.
So then you ask, what methods are they using? Well, I'd say at a high level, think about the opportunities for personalization. You can personalize your offer, the channel or the mix of channels, and your creative and your messaging. So I see financial institutions, experimenting with all of those. And I think, there is no shortage of platforms and techniques. I think depending upon the size and the sophistication of the financial institution, you will see some with very large internal infrastructures of people, process, and technology, largely built on A/B testing, and in-house proprietary modeling that they will use to drive decisions. And then you'll have, smaller institutions that don't have that kind of infrastructure, relying more and more on standard tools. But there is a lot going on in the space, so I don't think there's a standard approach. But people definitely trying to evolve away from A/B testing because there's just not enough there to deal with the proliferation of opportunities and the speed that's required to keep up with the market.
So it doesn't, basically A/B testing doesn't scale, is what financial services institutions are finding, to all the different situations in which they want to do this. Is that the right understanding?
I think it's becoming, I think you'll still see A/B testing in use, but I think it's more and more the market and the opportunities are outpacing what A/B testing can absorb, because to continue down the path of A/B testing in this kind of world of just virtually infinite offers, you need to scale your team. And so then you've got the pressure on expenses and, frankly, a shortage of talent. So you can't scale A/B testing because of what that requires from a talent and cost standpoint, and you still won't get the speed.
Yeah.
So you've got to find a way to move a lot faster and have the cost efficiency.
Yeah, that makes total sense. So when you were the Chief Innovation Officer at Citi, you drove change at one of the world's largest companies. I'm interested in hearing your experiences. What were some of the challenges in implementing personalization programs in large financial services enterprises?
Right. Well, I think the big challenge is just change, right? Change is, as human beings, change can be a little hard. And so introducing change can be difficult. I think on the positive side, at least in the business where I spent most of my time, which was the credit card business, has always been engineered around the idea of testing and learning, right? So, because it was at its core, a direct marketing business. So the idea of we need to test and experiment is sort of engineered into the business model. So that's like a big plus. I think the challenges then come down to, are we going to use outside tools when we've traditionally relied upon models that we built internally? Citi had a, legendarily strong analytics team who did a lot of the work in-house. And so what's the role, what's the right fit between, and what's the right mix of, okay, we have incredible internal resources and we want to complement them or augment them or actually get them involved to marry their skills to what's possible in terms of what external providers can bring. So I think that's one. I think the other is a very realistic concern that I think is becoming more and more on the radar of financial institutions today is, especially in a lending business, are you introducing bias when you're using tools like artificial intelligence tools? Are you able to meet the ethical and regulatory commitments of fair lending when you're using artificial intelligence? And I think that's a big concern that is front and center on the minds of management teams in financial services today, because I think people certainly see the value of leveraging this technology. I think the challenge is going to come down to how do you do it in a way where you really are engaging in fair practices with all of your consumers. And I don't think any of us have the answer to that yet, but I think cracking the code on that is going to be critical and a huge source of value.
Yeah. Yeah, that's an interesting and of course extremely important topic. There's a paradox related to this that actually I'm interested in if you have any thoughts on this, because one of the challenges that at least to me became apparent as I was reading about this topic, and both in terms of ethical writing and also how regulators think about this. A lot of companies say, well, the immediate obvious first step is let's just not take any protected characteristics, for example. Let's not feed any of that into our models. And that seems superficially fine. The problem is there are other types of data that often correlate with this. The classic example, of course, being zip codes, right? But it can be a lot more subtle than that. There could be, who knows what in the data that might correlate with any one of the many protected characteristics.
Could be what soda you drink.
Exactly.
Or what fashion brands you wear. Yeah.
Absolutely. Absolutely. And then if you play that forward and say, okay, well, then the next obvious step is, well, let's do this. Let's do an audit. And recently there was in the news that some financial services companies are starting to do this and are actually starting to commit to doing things like racial audits.
Right.
There's a problem with this as well, though, because let's say if you do an audit, and let me kind of come up with a thought experiment example. Let's say if you have a model that predicts price sensitivity for customers,
Right.
And based on price sensitivity, the idea is if people are more price sensitive, they need more of a discount, the model might offer them more discount. The model might find that people who are younger are more price sensitive, and therefore will start giving, for example, more discounts. And so then it becomes a question, well, is that because they're younger, or is it maybe because on average, people who are younger are less wealthy? This is possible as well.
Right, they don't have the income. They may have student loans. So is that right? Do they need it? Right. So then how is their student loan becoming a factor in your decision? So I think let's go back to the experience, if you can even imagine this, of,
Yes.
My dad in the bank branch,
Yes.
sitting across the table from the branch manager talking about, a line of credits that he can manage cash flow in his corner drugstore. It's, how's it going to feel to the customer? And, are you passing a common sense test of really, are you really creating value for the customer? Or is it a win for the financial institution at the expense of the customer? And I think the way to get around this, it's interesting. I think, especially nowadays when so many businesses see less and less of their customers because everything's going online, I'm not sure how often executives or the people building these models are out actually talking to customers and experiencing life, walking in the customer's shoes. And I'm a big believer in, a little bit of that qualitative real world interaction can help sensitize all of us, including the model developers and including the top management in financial institutions, to really understand how does it feel to the customer, and those kinds of insights can inform, sort of engineering empathy into the models. So I think that's very important. So that might be a little heretical to somebody like, to a mathematician like you who builds models and it's all about the data. But I think, understanding how people really make financial decisions and the emotion around it and what it feels like and the irrationality of it oftentimes can help mitigate some of these risks.
It's a really interesting point, Amy, and almost the analogy that comes into my mind is with software systems, it's become completely standard. You do usability testing, you see how people react to your software systems, and not doing that feels like malpractice. But with models, a lot of people don't think that way. But it sounds like what you're suggesting is almost saying like, hey, if you have a model, usability test the concept of that model, see how people would actually react, if I'm understanding you correctly.
That's really interesting. And one of my team's favorite practices when I was a chief innovation officer was to look at adjacencies to learnings about how to break through on problems. So that's a great example of an adjacency that, like, now I'm listening to this and like, wow, that's really obvious, but you're right, people don't do that. And I think that could be incredibly helpful. The other thing is to really think about I think when modelers in financial services, you're thinking about how do I make a more effective model, they're thinking about, I want to increase the response rate, or I want to increase the basket size, or increase the loan balance, or, minimize the number of times I've got to give the discount, et cetera, et cetera. Or meet the regulation. Think also about the experience that is resulting from the model. So what's the experience that you're creating for the customer? Because that also is a big contributor to trust and to the customer feeling like they're getting a fair deal. And so you have to go beyond the model and really work with your colleagues to, if you're the person in the financial institution who's advocating the use of a personalization model, you've got to think about the experience, what processes, because experience is also informed by the processes and policies. What do the screens look like on the website or the app? So you have to really understand the context in which the model is being deployed and what's the overall experience that the customer is having as a result. And so there's a lot of other levers that have to be pushed. You can't just implement a model a personalization model in isolation.
Yeah, yeah, absolutely. So question for you. So we've been talking about the kind of the financial services executives' point of view on this. How about regulators? How, as regulators think about personalization in financial services, what do you see them thinking about, and what are the factors that you see them as weighing in their minds?
I think clearly front and center is a big concern over fair lending. And am I using data in some way that is discriminating against customers because of their, demographics? And so I think, where they live or something like that. So I think fairness is a really, I think to me, that's the biggie. How do you prove that you're being fair? How do you avoid unfairness when you're using these models? They feel very, black box.
Yeah.
And that is not financial services have actually bounced back in terms of the level of trust relative to other sectors. I was just reading over the weekend, taking a look at one of the most recent Edelman trust barometers, and financial services are still sort of in a hole, but they are better than they were, say, during the financial crisis. So, it's back a little bit, but regaining trust, especially if you want to be a trusted advisor, are very important. And anything that feels too black box is going to naturally have a tendency to evoke feelings of mistrust, like what's really going on in there. So I think more transparency. That's why I'm assuming what's triggering some of this interest in audits, racial audits, is that there's a perception of a lack of transparency because AI has been positioned as this sort of magical thing. Yeah. And so I think I think people who work with AI have to unpack it a little bit and show what's really going on inside.
Yeah. One of the things that is, as I was learning about the regulatory outlook, I thought was really interesting, which is outside of OfferFit's wheelhouse, because OfferFit doesn't do lending decisions, but within the world of lending decisions, I was actually very surprised by the degree of nuance in some of the regulatory views, because it seems that regulators, when they look at lending decisions, on the one hand, they see the risk and the importance of fairness, but they also see that using methods like AI can actually take folks who are using the conventional scores like credit ratings may not seem as creditworthy, but in fact are more creditworthy. So it's actually a way of opening access to more lending. And it sounds like they're struggling.
Yes, and there's a real positive, and that I'm glad you're bringing that up, because I think that's very important. And don't forget, the regulators also have a responsibility. We think about like the Consumer Financial Protection Board and that aspect of the regulatory world, which is very much about protecting the consumer and making sure they get a fair deal, making sure they're not victims of predatory lending practices. But on the other hand, the regulators have a responsibility to maintain the safety and soundness of the financial system. And so they want to make sure that the banks are strong, that their balance sheets are strong, because it won't do any of us good as users of financial services for our bank to fail or to end up in a precarious financial situation. So they have a dual accountability, right, to the users, but also to maintain the safety and soundness of the system. They also have, they're very concerned with, financial wellness is a, almost, crisis issue, certainly for some segments of the population. And for, many people in this country have no retirement services, can't afford a car repair. Financial health is a critical issue in this country. And so doing things to improve the financial well-being of more and more people in this country is something that the regulators feel a responsibility to help enable. So I think that's a really excellent point. And perhaps AI will disrupt the notion that it's, largely about the credit report. Although I have to say, financial institutions have been augmenting credit scores with other sources of data for a very, very long time. It's just AI has the potential to, get to a whole other level.
Yeah, exactly. Oh, that's really interesting. So I'd love to open up to others on the call to see if folks have additional questions for Amy.
I think X lending decisions, just to continue that train of thought, you talked about improving the financial health and well-being of customers of different financial institutions, or any country as a whole. What are some of those types of well-being activities that you think AI could play? That AI could support making?
Wow, I think helping people, getting back to what I said at the beginning, that what's a real value to many people is feeling they have a trusted advisor. So what is a trusted advisor? Somebody who can help them make smarter financial decisions, from daily budgeting and managing transaction activity out to, planning for the bigger things in life, whether that's a home purchase, whether that's sending your kid to college, whether that's, making sure that you're saving something for your retirement, whether that's making sure that you're ready to deal with an unexpected emergency. Many people end up in situations where they're not able to pay their loans, not because they're bad people, but because of a medical emergency, a job loss, something happens to a family member that all of a sudden creates an issue they're not prepared. So I think any ways that AI could be used to help people navigate the financial challenges of life and do it in a way that creates a positive experience for the customers, so they feel, for the users, so they are making progress. Many people don't want to take on the idea of the big financial plan for retirement, and frankly, they can't. They're counting on a pension or Social Security. But I think many people, and this is from my own experience and research that I've done doing interviews and focus groups with many target customers over the years, is that small manageable steps inspire action. So I think using AI to coupled with a good experience to help people identify and execute those small manageable steps would be a positive. What that translates into in terms of specific ideas, we'll have to have a brainstorming session to figure that out.
I think you mentioned, probably 15 of them over the course of that. So thank you.
All right. Well, I always have people who know me know I have no shortage of ideas. But yeah, I think there's a lot there because the traditional financial services approach has not cracked the code on that. So and that's why you see many fintechs operating in this space, trying to create a better experience and serve underserved populations that the traditional system has really largely been unable to serve.
Well, Amy, fascinating discussion. Thank you so much for joining the OfferFit virtual series. And and I really enjoyed the conversation and a lot of just really interesting points that you've made. So.
Well, thanks for having me. And financial services is the area that will never run out of challenges to solve. So always happy to talk about it. I'm sure if we meet in a couple of years, we'll have a whole new set of challenges. So I'm looking forward to seeing how AI helps people meet their financial needs better and help the industry move forward. So good luck.
Thank you.